Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing two articles, and the first one is titled, Wall Street Analysts Believe SoFi Technologies Inc., ticker symbol SOFI, could rally by 25.68%. The next article we'll be analyzing in this video is titled, Here's Why SoFi Stock Might Be a Screaming Buying Opportunity Right Now. So for more news updates, price targets, and future predictions regarding SoFi Technologies and their SoFi share price, remember to go and annihilate that like button, subscribe if you are new, comment down below where you think the SoFi share price is headed in the future, and without further ado, let's dive right into our first article. Currently, SoFi stock is trading for close to $6.62 or $6.50 because the company recently gained around 16.8% over the last month. Now, with that being said, many professionals still believe that there's plenty of upside still left in this stock to where it could surge over the next few months, and Wall Street analysts are very bullish on this overall company in general. Currently, the mean price target, or the average price target, is currently $8.32, which would indicate around a 25.7% upside potential over the next 12 months. This is taking into consideration around 11 short-term price targets from experts, with the lowest price target coming in at $6, which would imply a decrease of 9.4% for SoFi stock, or a more bullish positive analyst actually anticipates and projects that the company is forecasted to surge by 96.4% to $13 over the next year. Now, what I want to say is that investors should not solely invest based off of analyst price targets. These are something that we need to take with a grain of salt. And although price targets are something that investors need to be aware of, we should not solely bank on these price targets and make an investment decision. You always need to make sure to do your own research, make sure that this company aligns with your own risk management policies, and if it has a place in your portfolio. On top of that, there is strong agreement among professionals regarding this company's upside potential, particularly pertaining to how current forecasts say that their next earnings report, they're supposed to beat on their overall projections and estimates, which could cause the overall share price to increase just like it did after their last earnings report. A price target is just one piece of information that investors need to be aware of. The reason why we would even want to pay attention to various price targets is because normally Wall Street professionals have a deep knowledge of the company's overall fundamentals and projections, considering that they're the ones estimating these various forecasts. Now, some of these price targets are overly optimistic. So, like we talked about, that $13 price target may not be as realistic as maybe that $8 price target that we saw earlier, because that is more of the consensus price estimate. The reason why some analysts would want to artificially increase their overall high-end price target is if the company they're reporting on is doing business with their overall firm, or if that firm has a large position in that particular stock. So clearly these analysts would want to see the overall share price increase regarding the stock that they are covering. But I also want to say that the opposite is true. For instance, if this company like SoFi is in competition with any of these analysts' firms, they are more likely to issue lower-end stock price targets for the company because they don't want the company to do well, considering that it represents direct competition for their own institution. This is why we should put more emphasis on the median or mean or average price targets, which are going to give us a more accurate version of where the SoFi stock price could be headed in the future, because this would represent a lower standard deviation compared to other price targets, especially if the majority of professionals agree on a price target. We as investors can use this information to predict future stock price movements in the SoFi stock price. With that being said, clearly investors should not simply ignore price targets, but at the same time they shouldn't weight these price targets very high. You need to read price targets with a high degree of skepticism and take it with a grain of salt. If anything, just use it as a general guide to what this company could be worth in the future, but not necessarily what they will be worth in the future. Now, the reason why we are highlighting this for SoFi Technologies, which is a fintech company, is that professionals are growing more optimistic optimistic about this company, especially as they move further toward their next earnings report. According to current forecasts, professionals have indicated strong agreement on their overall positive revisions for their earnings per share estimates. That means that professionals are taking current projections and are actually increasing them, meaning that SoFi could actually bring in a revenue or earnings beat for their next earnings report, which honestly won't be for quite a while, but empirical research shows a strong correlation between professionals increasing price targets, estimates, and projections for EPS and revenue and where the future share price is going to be headed for the stock. That's one of the reasons why Zacks Rank as an institution gives SoFi stock a buy rating, because they rank this company as a number 2. If you're not familiar with Zacks Rank, essentially they will rate a company between 1 and 5, and between that range would be either a buying opportunity or a selling opportunity, to where the rank or rating of 1 would mean a strong buying opportunity and a rank or rating of 5 would be a strong selling opportunity. Considering that SoFi Technologies has a number 2 rating, and that's a buy rating, this places SoFi in the top 20% of more than 4,000 stocks that Zacks Rank covers. But again, we shouldn't just take Zacks Rank's word for it, we need to see what other professionals are saying, and the overall average stock price target for this company is over $8 per share, which means that right now could be a good time to invest into this company. Now let's move on to an even more bullish positive article regarding where the SoFi share price could be headed over the next 12 months. This author particularly has recently changed his position on SoFi Technologies, to where originally he was a bearish critic, but now he has changed his mind on the company after their last earnings report and their future projections. After SoFi Technologies posted their recent earnings report, the stock price surged to more than $8 per share, and then it fell back down to around $6.50 per share, which is close to what it's trading at right now. Considering the downward trajectory of the overall share price right now, it would not shock me to find this company at or even below $5 per share before their next earnings report. However, even if that were the case, technically it would just make it a better buying opportunity for bulls on this company, because once we look into the fundamentals of this fintech/neo-banking institution, it has re-entered the buy zone according to most experts. The author of this article goes on to say that he believes in the possibility of SoFi making a major comeback after their next earnings report, despite any bearish negative critics saying otherwise. And he highlights 2 main reasons for his new bullishness on this overall company, so let's dive into those reasons right now. He says that recently SoFi has increased their overall outlook for their next earnings report, which has wowed investors. Again, making positive edits to their projections is very good, and this could get investors even more excited about this company, but I would say let's wait until their next earnings report comes out to see how bullish investors are really going to get regarding this company. One of the first reasons that the author highlights for this newfound bullishness is investors hoping that the Federal Reserve will pivot back more toward an accommodating interest rate policy. For instance, if the Federal Reserve lowers interest rates, this is going to affect growth companies, technology companies, and banking companies very positively, in which SoFi Technologies would fall under all 3 of those categories. But I would actually say that the Federal Reserve is not leaning more toward accommodating policies right now, but they will in the future. The Federal Reserve is still remaining hawkish considering the macroeconomic environment, because they need to keep interest rates high to keep inflation under control. That means technology companies, banking companies, and fintech companies will remain somewhat depressed during this time, making it a better buying opportunity for investors. Now, when I say buying opportunity, that doesn't necessarily mean it's a good buying opportunity for you. Always make sure to do your own research, and to be transparent, I only have a 4% allocation to this overall company. There are so many other fantastic companies to buy on the stock market right now that I don't want to over allocate myself just to one singular growth company such as SoFi Technologies, because there are other great deals on the market right now, and this also is just practicing proper risk management. You don't want to put all of your eggs in one basket. Instead, you want to highlight multiple stocks and companies, or multiple eggs in this metaphor, because even if a few of these don't work out and these eggs break, you're still going to have major returns from those other great deals that you identified. Some other reasons why this author has recently switched from a bearish negative perspective on SoFi Technologies to a bullish positive positive perspective is that he believes their path going forward is very strong in regards to their overall growth rate. SoFi Technologies recently posted a very strong year-over-year revenue growth rate of close to 60%. But the author believes that their future growth rate is going to be just as competitive, if not more, and he highlights one analyst. And this analyst has argued that SoFi Technologies is currently set to beat their overall revenue expectations for the year of 2023, meaning that their future earnings report throughout the year are going to be rather positive. On top of that, the author also highlights and cites this analyst when the analyst alludes to SoFi Technologies bringing in higher EPS or earnings per share than originally forecasted. And here are those forecasts right now. Instead of the company slowly climbing from 3 cents per share over the next year to 50 cents per share by 2026, this author believes over the next few years, this company could absolutely demolish those current estimates. Now, if I could interject here, I think growing from 3 cents per share to 50 cents per share over the next 3 years is still very impressive. So even if these more conservative estimates are true, SoFi Technologies would still be a good buying opportunity. Now, what I don't like is that this author is slowly becoming overly bullish and too much hype for my opinion, and if you don't agree, just listen to what he says next. He says that based off of current expectations, he wouldn't be surprised if the company's share price surged by 100% within the next year or two. So at minimum, that would mean over the next 12 months, the company could more than double over the next year or over the next 2 years. And I think that is rather too bullish and too much hype. He says in the best case scenario, the company could reach anywhere between $50 to $20 per share as price targets, and that would be in the realm of possibility. So let me agree and disagree with him here. Yes, technically that is possible. However, I would say if SoFi does reach these price targets and price predictions of $15 and $20, this would be way too high. So let me bring you back down to earth here. I think that the author is overhyping this company, and I don't think that they will actually be able to achieve price targets of that magnitude over the next 12 months. Now, with that being said, even if SoFi Technologies brings in conservative estimates based off of current forecasts, the company is still set to grow very aggressively over the next 3 years. So the bullish case for SoFi Technologies is completely intact, but beware of certain individuals trying to overhype this company, saying that it's going to explode, because even if it does, the company would not be a good investment at those prices. It would be way too inflated. Also, these estimates are assuming very high PE ratios and PS ratios, which is their price to sales and price to earnings ratios or multiples, which are uncomfortably high. If SoFi Technologies is going to be valued as a banking institution, they would not be set to reach these current price predictions. Again, this would be in the realm of possibility like the author highlights, and let me agree with him on that again. However, I don't think it does investors justice to overhype a company. You need to have realistic expectations about SoFi Technologies and their future growth rates, and considering that current professionals are reiterating their current forecasts for their revenues and earnings per share pertaining to SoFi's future earnings reports, I think this is already a very bullish development, and what we can do as investors is not overhype this or blow this out of proportion. We need to be safe, realistic, practice proper risk management, and see what this company has for us in the future, considering that fundamentally I think they are very strong. But I would love to hear your thoughts down below on where you think the future trajectory of SoFi Technologies is headed, and whether or not you think this company is a good buying opportunity. Don't forget to go and annihilate that like button, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.